Home to around 800 captives writing more than $12 billion in premium, Cayman is one of the leading captive domiciles in the world. Cayman is famed for its capabilities in healthcare insurance. Meanwhile, its annual captive conference, the Cayman Captive Forum, has grown to become the largest event of its kind in the world. In this special report, Captive Review speaks to some of the island's best-known service providers to identify trends, challenges and opportunities in the year ahead. And given Cayman's history, it's no surprise that with major reforms underway in the US, it's healthcare that takes top billing.
Well, Cayman has formed its first healthcare captive in 1976. And with a wealth of knowledge and experience, I think we are the domicile of choice when it comes to healthcare captive. We've seen so many different structures. We've seen changes in the industry itself, changes in the structures. I think just our experience, we understand the risks, we understand the various aspects of a healthcare captive. And I think in some ways we understand more than other domiciles do, as well as the regulators, the service providers do. And when you have all of those bits come together, I think that's why we've been so successful, because we really understand the business. I would say the healthcare industry is a changing landscape, mainly due to the effects of the Affordable Care Act in the US, as well as financial issues caused by the economy. We've seen captives that started out writing just medical professional liability, general liability, and workers' compensation go on over the years to add things as property coverage, auto liability coverage, and in more recent years, things like equipment maintenance, cyber liability, and employee practices. Those changes in the healthcare entities themselves have translated into change in the captives, of course, and how they're structured. The healthcare entities as well have gone through a number of changes. They're going through mergers, acquisitions, they're forming joint ventures, and of course that changes in how the captive is structured. We here at GCM have seen captives convert to segregated portfolio companies so that they can place the risks of some of the entities with which they have joint ventures into separate cells so that they can separate the risk from that they themselves are writing. We've also had captives merge because of the merger of their healthcare parent. So I would say that the captive landscape is just continually evolving.
And how to respond to new demands from the US healthcare sector was high on the agenda at the Cayman office of KPMG, who hosted Aon and law firm Walkers to discuss this and other matters.
Cayman as a jurisdiction has always been a strong healthcare jurisdiction.
Sure.
The market in the US at the moment is undergoing fundamental and radical change, and some of our clients are at the forefront of that and really capitalizing on it. And there's other clients who are struggling with it. We're right in the middle. We're thrust in the middle of it as partners with these clients in terms of trying to help them deal with the M&A activity that is going on within the market at the moment. Clients of ours who are acquiring other entities, there's captives that come with those, so we're being asked to try and merge the captives or look at them from the feasibility of whether we can maintain the two of them or shut some of them down. And so I think at the same time, we as an industry have to adapt. Our traditional model from an insurance management perspective is changing. Clients are looking to us to add value, to bring a different range and depth and quality of service to bear that maybe we have done heretofore.
I mean, Cayman being the leaders in the healthcare captive industry, having faced that change in reform in the US regarding the healthcare there, I mean, obviously there's a huge impact in the Cayman Islands on that. We're seeing a lot of our captives, merge. We've seen other captives where there is a large parent healthcare organization in the US, and they're absorbing some of the smaller healthcare providers as a result of the change. We're seeing a lot of new coverages being provided, a lot of lost portfolio transfers into captives. As I mentioned, captives themselves, where two separate parents merge in the States, the captives are having to merge in the Cayman Islands. We're seeing other situations where there's a need to release some of the reserves in the captive so that some financing, redeployment of financing is available. And all these questions are coming to us as service providers. And we've shifted from a situation in the past where we were managing their business, auditing their business and filing that with the regulators, to a situation now where we're having to add value.
Sure.
The questions are coming at us and we're having to be, listen, understand what the changes that clients are facing and having to respond with appropriate solutions to help them with their strategies.
We paid a visit to the captive team at Marsh, who suggested one way in which captive structures could be used to meet the evolving needs of the healthcare sector.
Gordon, also, with thinking about the Affordable Care Act, what are your thoughts in respects to using of cell-type captives to address some of the issues there?
Well, that's a good question. With cell-type companies, as we all know, they were originally introduced as a asset protection mechanism, really for renter captives and that kind of facility. But over the years, they've morphed into a lot of different types of solutions for different types of captive models, separating risk, separating lines of business and classes of business, separating shareholders even in the same company. And I think when you're looking at the Affordable Care Act, we're really looking at bringing in some different risk elements into a structure which you don't want to expose to your regular asset base, but you also want to actually incorporate the risk management processes. And I think it's a great opportunity for the future.
But there's more to Cayman than healthcare. Indeed, most classes of captive business are written on the island. And according to law firm Walkers, the convergence between insurance and the capital markets presents Cayman with an opportunity to develop a new type of captive business.
Some of the trends we are seeing at Walkers are interesting. Obviously, a lot of continued interest in captive establishments, etc. But I think post-crisis, a lot of the interest that we are seeing is a sort of a leveraging of our existing client base in other sectors. So the funds industry, private equity, structured finance participants, they are now quite interested in insurance products and how they can use insurance as a tool in a structure that they are putting together. So that's quite interesting because they're coming from different backgrounds, but they're very interested in the sector. Also, one area that is interesting, and I think it will be a trend, and there's increased focus on longevity issues and on mortality. So we'd be looking at more life entities, more wealth management, more maybe private placement life type entities, and particular structures and the type of participants I mentioned there on the structured finance or investment funds or private equity. They are looking at solutions for workers' unions, for pension funds, for sovereigns who have these unfunded or not fully funded commitments for example, for retirees who are living longer than their original tables expected. So that is something we're seeing more interest in, and we think in the future there will be more structures. And again, Cayman, given its existing client base, its legal and regulatory framework, and the fact that it has always been a home for innovation, is best placed to facilitate these new structures, in my view.
You're absolutely right, and it's a fantastic opportunity for Cayman because I think our traditional market segment is now changing. Yeah. Our usual point of entry historically was the risk manager or the financial controller and the CFO. Now we're being exposed to this entire new market and so many different perspectives that it creates challenges for us, obviously, to try and increase the standard of our output and the quality of the people that you have here and become more of a generalist, right? KPMG and Aon worked on a transaction this year, DARA, where we had on that closed life book of business where we're trying to strip out the volatility for the client, and that we feel very bullish about as a huge opportunity area of growth for us.
Yeah, no, absolutely. I mean, in my view, the captive industry and the hedge fund industry or the alternative investment industry in the Cayman Islands have kind of been two industries that emerged independently of each other, and I'm seeing a lot of overlap now between the two, where the traditional captive insurance companies are replacing, vanilla type investments of bonds and equities with funds, hedge funds, and in return, what I'm seeing is a lot of the private equity houses and investment interest in using insurance structures as a new type of product to securitize risk and sell that to the capital markets. So there's a perfect symbiosis between the two, and I think, Derek, on your point, Cayman's a great place to establish those types of structures.
Interest in captives is also growing among middle market companies. For those seeking a cost-effective entry into captive insurance, group captives could be appealing. And this is an area widely tipped for growth.
Cayman is well known for its healthcare captives as well as group captives. And I think that these group captives, even though they've been around since the 1980s, they're going to emerge and really come to the forefront in regards to the next area of great growth in regards to the Cayman Islands, due to the fact that when you consider roughly only about 3% of small to medium-sized employers have exposure to a captive or participate in a captive type program, there's an awful lot of uptick and opportunity there. And especially now with the Affordable Care Act on the horizon and being able to have that as a solution for the aggregate stop loss for small employers, I think that we're going to see a lot of emergence and more activity happening in the growth arena.
We're seeing significant growth in the group captive space. A lot of people have recovered since the 2008 downturn, so we're seeing increased growth from existing membership as well as increased members joining the captives. It seems with premium rates starting to increase, having a steady premium base is appealing to a lot of people in the market again. Group captives are great for people with smaller premiums or those who can't form their own captive because of group tax deductibility purposes. Essentially, group captives that we manage, we have workers' comp, auto liability, general liability within them, and pretty much anyone can join. We have construction, petroleum manufacturers, retail, it runs the gamut.
Well, we've been through a tremendous economic turmoil from the mid part of the last decade, 2008 onwards. But out of those kind of situations, you get a lot of the middle market and small market businesses that start up, that have developed. We've had 5 or 6 years now of development, and I think this is a great opportunity now for, as you said, the group captive solution, an SPC solution to actually go into that market and start meeting some of the more complex risk management needs.
That's the beauty of the Cayman model, I think. We have a good structure, we have a good foundation, and it sets the stage for people to expand and develop on various structures and using proven corporations and entities in new ventures.
The tax advantages of locating in Cayman are well documented, but with offshore centres under increasing scrutiny, we asked our service providers to outline tax considerations for companies considering setting up in Cayman, as well as the challenges Cayman faces in an increasingly competitive global landscape.
Well, for new captives, you're really worried about setting the captive up correct to make sure you're meeting all the tax objectives for the insured and the shareholders. Now, for-profit, this means tax deductibility. However, on the flip side, for a non-for-profit, they're not looking for tax deductibility. In fact, that hurts them. So whenever you're starting out with a new captive, you're looking at the ownership structure, you're looking at the number of insureds, and you're trying to align these to make sure that these are meeting the models, these safe harbor models that the IRS produced back in 2002. Now, depending on whether you're dealing with for-profit or non-for-profit, you can use these revenue rulings for your position or against your position. Now, what's happened recently, there's been 2 court cases, and these are perhaps putting the IRS revenue rulings on end. So it'll be interesting to see where these rulings, which focus on risk distribution, transfer of risk, they dealt with common accepted terms of insurance, and insurable risk. Now, it's interesting that these decisions relied on the actuarial's determination of what risk distribution is, that being that you're dealing with large losses, the law of large numbers. You're dealing with individually identified insurable risks, as opposed to the number of insureds and the number of policyholders that you'll find in the revenue rulings. So when you're dealing with a new captive setup, you're really focusing on what is the captive's needs for tax purposes? Are we looking for tax deductions or are we not? And make sure you model your captive in the right way.
Cayman, having a global market faces challenges in this dynamic world we're living in. I think one of the key challenges I see as an accountant or an auditor is changes in regulation, changes in global regulation, particularly where post-financial crisis, a lot of regulators have responded with increased regulation. Cayman's kind of maintained its competitiveness and its position because it brought about new rules or new laws and regulations that are proportional to the type of captive that's based in Cayman.
But don't you guys find that our traditional services that we've offered have to adapt now to be able to take into account the more onerous requirements from a regulatory perspective? You know, we as managers have a greater responsibility now to challenge some of the boards in terms of their efficiency, in terms of their makeup, and in terms of some of the areas that maybe they're not looking at. And we have an increased obligation. I'm sure you as auditors and you as lawyers have that same obligation.
Absolutely, you're right. I think the changes in the law have increased the responsibilities for the manager and the auditor.
But not only that, the legal and regulatory framework in Cayman is designed to be proportional. So the amount of resources, costs, etc., that you have to allocate to a particular structure or particular captive will be proportionate to the volume and the complexity of the business it is doing, and that so not having a one size fits all is extremely important, and it's extremely important for attracting new entrants to the market here in Cayman.
And attracting new entrants to the market kind of brings about another challenge when globally the number of jurisdictions opened up, particularly in the United States, has created new competitive pressures on the Cayman Islands. However, Cayman Islands, having had 40 years of experience, has really developed its own centre of excellence, for captive insurance companies. I know we've had, clients look to go onshore, and as part of their due diligence process, they realise that the quality really is in the Cayman Islands and similar jurisdictions where the captive industry has been at its forefront for a good number of years.
Sure, we've seen that. In actual fact, a lot of our current Aon clients are coming under pressure within their own home jurisdictions from their local regulators asking would they consider coming back onshore, and they've asked us to help them have those conversations. And so we as a manager down here have had to face up to the reality of the increased competition from onshore. I mean, we as Aon, we can manage them anywhere onshore that they want to go, but we often remind the client, look, you've got to look at the infrastructure that surrounds your captive. You have to look at the managers that have the experience. Do you have actuaries with experience? Do you have lawyers who know the business? Do you have auditors who know the business? And once you look at that team that's surrounding the captive, then it's an easier conversation to have. There are some that politically will just feel the optics for them are better to be onshore, and we have to address that. But I think fundamentally those that really understand the business, the sophisticated clients, will generally end up staying with the jurisdiction that has 40 years plus experience.
We don't really see it as competition at all. There are a lot of domiciles onshore and offshore. However, each of them has their own strengths and weaknesses. For example, in Cayman, the healthcare captives, the vast majority of them are domiciled here. We also have other types of captives too. Onshore, some people may not want to be offshore, may not politically be able to go offshore. And so therefore you look to see which was the best domicile to suit those, Vermont being one. We're licensed in South Carolina and also in New Jersey, and those are other respected domiciles. So you're really looking to see what they're looking for. Tax elections, whether they want to take a tax election being offshore or just be remaining onshore, and then you work out where to go from there.
Yet Cayman continues to rank as one of the most popular captive jurisdictions in the world. So what are the secrets to its ongoing success?
Well, I've been here since 1981, since the birth of captives, and we've grown tremendously over those years, a lot of it due to the hard markets from 86 to 89 and 99 to 2001. But I think one of the major reasons is because of the professionalism and the expertise that we have in the service providers here, within the captive managers, within the auditors and the banks, who have been doing this for a long, long time. That expertise has served the clients exceptionally well over the years. Another reason is the interaction that goes on between our association, the Insurance Managers Association of Cayman, the Cayman Islands government, and then the governing body of captives, the Cayman Islands Monetary Authority. If there are any changes that the laws that clients would like to see, particularly the outside lawyers, we try to work to make sure that we can do that. One example is the SPC law. They noticed clients didn't want to go through setting up their own captive, and so segregated portfolio companies were set up to allow people as a stepping stone to their own captive to basically borrow or sell inside someone else's captive. This has helped us keep at the cutting edge of the laws that are out there and to meet the client's requirements.
So in my experience, clients are always amazed at the responsiveness and the approachability of CIMA. The fact that CIMA effectively can participate, albeit somewhat softly, in the structuring process. If there's something, if there's sort of some red flags, they can be addressed up front, and it just makes the process much smoother. We have offices in a number of jurisdictions. We get exposure to a number of other regulators quite a lot, and absolutely there's no question our experience from CIMA is that they are a participant. They're working with us, and they will do what is needed to help us and a client get a
well, it's a collaboration, right?
Yes,
I mean,
absolutely.
as an industry, I think it's a collaboration between us all. That rising tide lifts all boats, and I think if we have taken a lot of those initiatives together as an industry for Cayman Inc. being able to move forward as a group.